Hey everyone, Kamapoko here, your favorite, and maybe slightly clueless, beginner FX trader. Today, we're diving deep into some US dollar to Japanese yen market analysis. I'll also be dropping some important disclaimers, so make sure you stick around till the very end. You won't want to miss my amazing insights, or my epic fails. Yesterday, I was totally eyeing a buy on the dip near the neckline of a double bottom on the 1-hour chart. But wouldn't you know it, as soon as I finished my super pro analysis, the price just started creeping up, and away, all the way to the recent high. Classic. So, yeah, that expected chart pattern? It totally ghosted me. Which means, sadly, I made exactly 0 trades yesterday. Zilch. Nada. That long wick candlestick that formed? That was during the US economic indicator announcements, and if you zoom in on the shorter time frames, things got a little wild. Good thing I didn't touch it. Bullet dodged. By the way, I post super detailed market analysis on my blog every single day, so if you're into that kind of thing, definitely check it out. Shameless plug, I know. Fair warning though, the blog is where I actually, get serious. Like, no jokes, just pure, unadulterated market wisdom. Don't expect any meme reviews over there. Alright, let's get down to business and get this market analysis party started. So yesterday, I didn't actually go over the weekly chart in the video, but usually, I like to start from the weekly and work my way down. I'm not really a scalping guru, so I prefer to trade with a longer term perspective. It's less stressful that way. Mostly. Here it is, the weekly chart. This right here is the last lower high, and since it hasn't broken above it, we're still looking at a bearish trend for now. But here's the thing you gotta watch out for. Just because the higher time frame is bearish, does that mean shorting has a higher probability? Nah, fam, someone super smart once told me that. So don't just blindly follow the herd. On the weekly, we were kinda expecting a 5th wave of a downtrend to pop off, but honestly, it's getting a little dicey out here. You can totally see that the buyers are putting more pressure on than the sellers. My chart shows the weekly lower high at 151.208. So I'm still guessing we'll hit the 150 yen range. Or at least get close. Probably. Next up, let's peep the daily chart. Gotta go fast, otherwise, while I'm busy making this video, the price is gonna keep moving, and by the time I upload this, I'll be talking about a completely different market. And here's the daily chart. The recent high was right here, but on July 15th, the candlestick body clearly broke above it. So, that means the last lower high is probably right here. Probably. As long as the price stays above this level, I'm looking at a bullish trend on the daily time frame. Alright, let's take all that info and check out the 4-hour chart. Here it is. On the 4-hour, the highest point is here, and the last higher low is right here. Right now, as long as the candlestick body doesn't clearly break below this last higher low at 147.55 yen, I'm staying bullish. It has to be a clear break with a candlestick body. So, even though the market went wild and the price moved a ton because of all that Powell drama, it only broke this level with a wick, not the body. So, for the 4-hour, we're still bullish. Man, this market is a pain in the butt to trade. But then again, for me, it always is. Haha. Yo, check it. Here's the 1-hour chart. And honestly, it's kinda hot mess, fam. My grandma's knitting looks more organized than these price movements. Ain't no clean waves forming up in here. So, me personally, I'm still kinda seeing this low point as the last higher low, so I'm leaning bullish. But I bet your cousin Vinny, who knows a guy who trades crypto, probably sees this totally different and is all about shorting. Whatever. Vinny. Honestly, the 1-hour is giving me a headache. It's about as clear as mud after a monster truck rally. So, I'm not even gonna sweat the overall bias too much here. Let's just say we've got a little range vibin' within these levels, and call it a day on that, you know? Don't strain your brain too hard on this one, kids. Alright, now for the grand finale. Based on all this super pro analysis, you're welcome by the way, I'm gonna spill the tea on my ultimate trading strategy. It's actually pretty simple, fam. My go-to move is buying the dip. I'm literally just waiting for the price to slide down to the sweet spot. Basically, around the 4-hour higher low in the bottom of that janky 1-hour range we just talked about. That's when I'll be looking to smash that long entry button. We might even get a double bottom forming up there, which would be chef's kiss. I honestly couldn't care less what the price is doing right now. Nah, for real. Okay, fine. Maybe I'm kinda lying. Sometimes I'm like, lower time frames are showing a downtrend. Maybe I should go short here. So, yeah, saying I only buy the dip? That's a total fib. If the opportunity presents itself, I'm definitely down to try a short. YOLO, right? And if the price decides to blast off from where it is now and break higher, then I'll be looking for a support resistance flip at that level to jump in with a long entry. Because, let's be real, with the overall market vibe, buying orders just have better odds. So, yeah, that's pretty much my vibe right now. What do you guys think? Am I a genius or just totally winging it? Let me know in the comments. And that's a wrap for today, folks. My brain cells are officially on vacation after all that. Now, on this channel, I'm gonna keep dropping market analysis and showing you all my wild trading rides, and maybe some epic fails, let's be real. So, if you're actually into this kind of stuff, seriously, no pressure, just if you're feeling it, then go ahead and hit that subscribe button, smash the like, and drop a comment. Only if you actually want to hang out again, okay? Alright, catch you in the next one. Peace out.